And everybody, it's Tim Reazor with Revere Asset Management just before 3:30 here on a Wednesday night. So quickly, stock nerds, market lovers. Before you and I begin, look, I don't want to bury the lead here. I think we rally a little bit more. I'm going to show you where that point is, where I think we rally to in S&Ps and NASDAQ. This here, the market bottoms, finding market bottoms. The last 3 weeks of podcast, I've covered how I look at when a market's trying to find a bottom, and it doesn't happen all at once. And I think what we're seeing right now over the last 3 weeks here is a move to a point in time where I'm going to show you that we're about to take out some stops, and potentially, because it's a market, anything can happen, but I think that's where we're headed. I want to show you what stocks I think are going to work in that environment. And I think it works into next week, into options expiration, and then it's anybody's ball game. But we'll get into that in a moment. But if you want to find the Market Bottom podcast, like, you can watch them, you can find them on Google Play, you can find them on Apple iTunes. I really hope you do find them, no matter how you listen to them, right here in the podcast tab at revereasset.com, and then listen. Any questions, concerns, comments, take umbrage with anything I'm saying, like to do is email me to revereasset.com. Look, I want to talk to the guys that make all the decisions, buys, sells, what goes in the portfolio, what comes out, what goes on the watch list. Look, Hunter, Don, Alex, they're all available to you. And you can call us at 855-732-5932 as well. Especially, listen, if you want to talk to America's Fiduciary, I can't stress this enough, that we only do stocks, ETFs, bonds. We only do market stuff. We don't do insurance. So if you think you have a bad deal on a life insurance policy and you were told it was an investment, and of course life insurance is an investment, or an annuity is an investment, even though an annuity is an insurance product, and you want to know, like, is there a way to get out of it? What can I do? Why do I still pay a trailing sales fee to someone who sold this to me 10 years ago? Call Danny. Danny is one of the best in the business worldwide on these types of topics, and he helps people out every day. It's why he's America's Fiduciary. So with that, stock nerds and market lovers. Oh, and then listen, if you want to get a hold of me on Twitter, I'm always available to you, whether you call, whether you email. At TJ Reazor, hey, get a hold of me. We become texting buddies. Your messages show up right there. You just need a Twitter account. You don't even have to follow me, okay? And you don't have to do anything on Twitter, but it's your way to have a connection with me that stops me from giving up my phone number, which I used to do years ago, and then it just became a little bit too much. Twitter is so much easier for this. It's also brevity, okay? So listen, with that, stock nerds, these videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. Money advice, take advice. All you have to do, I swear, is give me a call. Real quick, let's look after hours. I want to show you a couple of things here that are happening that are going to make waves for tomorrow. So real quick, everyone will talk about Disney, right? Disney's up. This is pretty much the expected move. So Disney, if you'll excuse me as I clear up this chart here, Disney is up 12 points. That's the expected move. That's a big deal though, right? Okay. And then, but it's the expected move. It's things like this though. It's Twilio. Let's look at Twilio, because I think this is a bigger deal. So Twilio, the expected move was 31, and you can see you're up almost twice the expected move. That is a really big deal. And why is it a big deal? Because Twilio is one of those stocks, of course, just look at this chart, right? Twilio is one of those stocks that have gotten what? Beaten down. And so, I mean, from 400, I mean, over a half. So now do stocks like, and these are a little bit different here. So RBLX, how about Roblox, right? Roblox has earnings next week, up 10% today. Stops at the daily 21. Is a stock like Roblox going to now shoot up to this 50% retracement level before earnings? Don in the portfolios owns Dutch Brothers. You look at this great chart of Dutch Brothers, right? Just really nice looking chart, up fractionally today, but it's had a big move here. And that, by the way, that Dutch Brothers chart on a weekly is super nice, right? So pretty awesome chart there. And so let's take a look here. Let's just run through the indices like we normally do, and I'll show you what I believe is setting up. So, and I'm going to use the ETFs tonight. So SPY, and this is what you need to be aware of here. So let me reset my charting and let me zoom in. So we have that big, there we go. So we had that big move down. And so now this is, to me, is what's interesting. So it's human nature. And I want you to understand this. So there we go. Sorry, I've lost my mouse. There we go. Apologize for the technical issue there. Let's do this. Let's get this in SPY. And let's run a retracement here together. Let's do a fib level retracement just on SPY. And so we'll bring it down to the low point here, and I'll show you where we rallied to. So, and we've talked about this in the past, that these fib levels just act as gates, okay? And so you clear the 50% level, and now you're up here at the 618. If you were to clear, if you were to clear the 618, 467 is your next target. You're at 457, and some people are starting to go, well, yeah, of course, that starts to make what they're going to start labeling a head and shoulders top. And there's a really good chance that markets go up here and test. And well, why is that? Why would markets go up to that level? They don't have to, by the way. I really want to emphasize, they don't have to do anything that I'm saying. But is this the trajectory that we're on? And so it's here. So so how many people have stops here? They shorted the markets, they come down, and now we're back at this level again. And so where are stops? Yeah, probably just a little bit above here. Okay, so they're just a little bit above this level. And when stops are started to be taken out because shorts are going to cover, you're going to get that natural buying that takes place that could get you back up to that 786 zone and potentially into that right shoulder of the head and shoulders pattern. And so let's take a look here at QQQ. So here's the Qs, and we can do the exact same thing. So we'll do it together here. Just recent high, recent low. Okay, we are just about to come up to this 368 level. We're $2 away from this 50% retracement level. If we clear that, right, now what? Well, the next fence is potentially up here at the 618, the 377 area, $377 area. Can that happen? Absolutely, it can happen. Would that be? Would it be perfect? Like, I don't say perfect, but can you see that potentially you start getting up to this level? Is that a zone? These are zones, by the way, of a head and shoulders. Absolutely. And so, and that would be super interesting to me because you don't quite go make a new high. You shake all the all the natural stops are here. But look, first you got to clear this level, then you have to clear this level to make anything like that happen. But have we done that anywhere else, right? Are we on some kind of precedent? And so, well, let's look at the Dow. How about the DIA? And so, yeah, look, so what happens now? The Dow's going to go up even more tomorrow because of Disney going to drive a little of the train there. But look, yeah, you just cleared that level. Okay, so, well, Tim, you don't have your fibs drawn on here. Draw them with me. Okay, that's why I waited to do this with you. So we could do it together. So here we go. And look, now are we on the journey to 786 land? Yep. Now we're in kind of, it looks like we're in no man's land. We just stopped in no man's land. Do we have to go up here and touch this fence? Well, we don't have to do anything. That's the whole thing about markets, right? We don't have to do anything. And so, but is that the trajectory we're possibly on? Yeah, sure is. And then let's look here. How about the IWM, the small caps? Now, small caps. So I've got the fibs drawn in here. You can see we have not cleared this 50% retracement. Oh, maybe we do tomorrow, but we haven't cleared it. But if we were to clear it, do we come up here to this? This is the 50-day simple, and the 618 is 2112. It's a 50-day simple, that red line there. Yeah, it kind of makes sense to me. Now, you're saying, but Tim, you are not. You need to get a hold of yourself here, Tim. You're not even thinking right. You need to realize the letters tomorrow are going to be CPI. You got this big CPI report, and which is inflation. And look, I don't think there's anybody out there that doesn't think that that number is going to be big. And so what you want to be really acutely aware of tomorrow is, how does the market interpret that information? okay? Everyone expects a big number, but has that number peaked? Or is the Fed putting out feelers already because they're not in a quiet period anymore? Hey, we don't need to do a 50-point rate hike, which is probably 0.25%, no big deal, just 0.25. Is that kind of chatter already out there? Is that why markets have already started moving? And so you don't even have to think about that nonsense, right? As we find ourselves back on the S&P futures chart, pretend you don't even need to let your brain go to Fed speak, noise. What are they saying on the news and Twitter? How about we just look at the chart here? So a couple of weeks ago, right, we talked about a bottoming process, and you can see we never take out this low, right? We try, and then we don't take out this low, and now we don't take out this low, and we don't take out this low. And that's what a bottoming process is. It's using, and I call it the intercorrelated assets. You know, like I've got the ticks, I've got the VIX. Oh, we'll take a look at the VIX here. Bonds, Apple's a big asset, right? Crude oil, the indices, the breadth of the market, the dollar. And so it's using the things that are all at our disposal to just try to form a sight picture based on what the markets are doing. And the markets have not been easy here. Now, does that mean we're going all the way to a high? No, I just covered that. I don't, it can. I don't know if that's going to happen. I would assume such a dangerous word. I would think there's going to be battles along the way, potentially like maybe a little bit higher here at the 50-day. And if we shoot past there, squirt past there, potentially at this 786 level. But you got to think, who's more scared right now? But like, that's a great question to ask. Who is more scared, bulls or bears? If you're short this market and you just saw a good report come out on Disney and Twilio, like the poster child of getting beat up, high valuation stocks, just making nice moves, then, you know, what do you think? I mean, yeah, I think the bears might be a little scared, and maybe they reset. You know, if we go back to SPY, we'll use the ATR chart here. Oop, as SPX. Let's use the ETF like we've been doing. Yeah, and so now if we can get a little traction here to that 786, that puts us where? Yeah, here's +1 ATR at 460, and then can we get somewhere between +1 and +2 ATR? I think that's what this market has in it. Now, again, it's going to depend on that big CPI report. And what are some of the stocks that are going to benefit from this potentially? How about like, well, if they're going to rally the small caps or the really beaten down names like a Roblox, yeah, in the earnings next week, potentially up to 81, you know, 80, 81. But we'll see where that goes. But look at all what looks good already. You know, like you don't have to have like these beaten down names. How about something like Apple? It's a good looking chart there, Ed, right? Like little consolidation. So I'm sorry, my chart's bouncing around as it adjusts. I've got a giant, well, it's not giant, it's a bigger monitor in my chart. Look at this really beautiful consolidation. That's gorgeous, right? Can you break out and test old highs? Well, that would, if that happens, that would be good for stocks. How about Google, right? Google, super interesting to me here. Google comes down and it does what leading stocks do. Test the 21. I know like a lot of stocks have moving average issues. We'll just call them, they're not sequential. And you know I like sequential, so we'll just call them moving average as in Mai Tai. Moving average issues. All of them do, right? But, or 90% of them do. But look at this. Google comes down, holds the 21, and now is this back on a path to say this little gap up here at 20, you know, just maybe 2900 zone, right? 2900, 2925, somewhere in there. Maybe, right? In the right market environment. And so, Qualcomm, QCOM. You know, Qualcomm already reported. Boy, that too is a good looking chart. But then you have NVIDIA reporting next week, and NVIDIA had the breakup this week of the ARM Holdings deal. And NVIDIA, again, one of those big beaten down stocks. I mean, this one really took it on the chin. Could it get up to that 50% retracement level? We'll just call this a zone. And by the way, I still have, in full disclosure, I still have my NVIDIA position. And I've had it for a while since I first told you about it. back what, in the 220s, 230s. So can it get up here to this 280 level potentially? And so it doesn't have to. But if the story of this market is still going to continue for potentially tomorrow and Friday and into options expiration next week, well, that's a good story for bulls. And then when you get up to if and when you get up to these 786 levels in the S&Ps, and you get up to potentially, can you get up to this 618 and somewhere near, just above the 618, potentially up to a 786 in the NASDAQ? If you can do that, it's a big if. If you can do that, that's gonna get shorts. It's gonna trigger a lot of short covering, and so. But you got to understand that short covering is gonna start like right in here, and it's what's gonna drive the buying. And nothing's changed, right? They're still gonna tighten. They're still gonna raise rates. Maybe it won't be as bad, but what you're seeing play out right now is pretty much just human nature. And then one last thing here. And that human nature is, shorts covering, and the markets are equal opportunity dream destroyers. You know that. And so instead of just going straight down, they're going to cause the most amount of people, the most amount of pain at the least opportune time. And for bears, that time is now. And so look at the VIX here. And I want to show you this. And so VIX futures here. This is just, boy, these ATR charts are why I love them. Like it, it's not that did the market stop falling on 124? Well, if you look at the VIX here, the VIX hits 3 ATR, and then it just starts pulling back. And now we're here at, what is that, -1 ATR. Maybe the VIX bounces here. I don't know. VIX went down 4% in the face again tomorrow of that CPI report. That's why I think, you just want to, it's easy to say, trust the charts, look at price. A lot of people use those sayings with bravado when they say them almost sarcastically. And right now, look at the charts. What are the charts trying to tell you? And by no means easy. And let me just make sure I explain that really well. And by no means is any of this easy. And so, but look here, that's 124. And then let's go to SPY on 124. Well, let's go to S&P futures because that'll give you a better look see. So let's look at S&P futures on the 24th. There it is. So you get the VIX spike and on the ATR chart to the upside, and look, market spike down here, and now they've been trying to work their way back. And so I think it's really important to just note where you are in time and space and have that situational awareness and realize that it potentially, and why talk about all this, Tim? Well, because most people, most people are they're not short. But let's pretend that you are short, right? Well, I mean, most people don't want to hold on for that kind of pain, okay? And understanding, like when a VIX hits that third ATR to the upside, okay, that might be a place to take it off. It's really shorting so hard, right? Because you can find all the bad news out there, all the supply chain issues. You can find bad news wherever you want it. And here you have the market, and you're like, well, Tim, how much has the market really rallied here since you and the guys started talking about market bottoms? And so let's take a gander here, right? So here's that S&P low on the futures, and we'll just come up here and 8%. 8% on the futures off the bottom. And then how about the Qs? And some people aren't even aware of this because it's such, I mean, it's a lot of negativity out there, and I completely understand why. Almost 10% off the bottom. So we'll see if markets have a little bit more left in the tank, at least for this week. And so look, we'll have the podcast Friday, guide to get you ready, of course, for the weekend. Hunter has your video tomorrow, Don, with the 21/21 on Friday. And of course, we release the podcast on Friday as well. So listen, stock nerds, market lovers, I love you. I love how much you support our work. I love how you engage. And so I'm really grateful. So with that, I hope you have a great night, and I will see you at the next update.